stage Dr. C.K. Narayan. He'd be talking about WD Gann methods, analysis, and trading, the legend of WD Gann demystified for the analysts and for the traders. Dr. C.K. Narayan's achievements over his 37-year career in financial markets spanning across retail stockbroking, institutional sales, and marketing and investment management for corporates makes him an authority in the area of his expertise. Let's again have a huge round of applause for him, and let's get him ready for his session.
Church minister and a Mason. Now, it's difficult enough for any of us to achieve one of those kind of accolades, but here is a man who had achieved so many things, and that is the treatise into the kind of mind that he possessed. And he created multiple methods to chart and analyze the markets. I would think, at least I am aware of at least about 40 to 50 methods that he has actually created. So the man was indeed quite prolific. And much of his methods were based on geometry. There are also methods based on other than geometry. Geometry comes into use at various areas of life, and which also he went into. But the key thing that he did was he measured the time element and combined them with price, and he created methods out of that which were seemingly esoteric, which were seemingly a little difficult, which were seemingly clothed in a bit of mystery, but they were extremely effective. Right? So I think these are the reasons that we should look at it. He wrote a lot of books, but he was a little bit of a clever man, perhaps not really wanting to reveal too much of what he was doing. And he has in his books and courses actually written at certain places that the general public is not yet ready for my work. He was, of course, talking about the 30s and 40s. But we have moved along 50, 70 years since then, and I would presume that with the advent of technology and with the general progress that mankind has made over the past 50, 70 years, we should definitely be ready for most of his methods by now. And that would be another reason to look at what he has actually done. And because of the lack of clarity in his books, there is a great deal of interpretation of what he really meant. So what passes today for Gann's work is actually interpretation by many of his followers, including yours truly. What I'm presenting to you is my understanding of what Gann wrote in his books, in his courses. I have read almost all of them, the various books that he wrote, the 2 courses on commodities and stocks that he wrote, the various interpretive letters that he wrote, and of course the books written on him, on his methods by various people. Over time, what has really come to the fore or into the public domain are a few of his methods like swing charting, angle trend lines, square of 9, squaring of price and time, etc. These have become fairly popular and are among the more widely used of the approaches. Right? So let's go into the methods. I will briefly touch upon what I'm going to look at. One of them is swing charts. Many of you might be aware of swing charts. There's nothing very sort of special about swing charts that most of you would not be aware. It's one of the simplest ways to draw a chart wherein you can use a certain amount of filter, right? So you can use the swing charts by points, by time, by percentage. So it gives you flexibility of how swing charts are to be drawn. For a swing to be recorded, prices should move beyond the previous price, high or low, so depending upon swing up or swing down, for certain percentage, certain amount of points, or certain successive number of price bars, right? So if you take a daily chart, 1 bar swing, 2 bar swing, 3 bar swing, 4, 5, n bar swings, right? Until these moves do not occur, the swing does not change. So a certain move might actually undergo a 1-day reaction, a 2-day reaction, but if you're using a swing chart which is, let's say, 2-day or 3-day in duration, you will be able to kind of filter out whatever noise is there. Also, using it in the form of a swing chart gives you very good reference points to judge the trends and the progress of the trends and the changes which will occur therein, which helps us to create trade entries and exits. So those of you who have not looked at swing charts till date, I would strongly suggest that you do take a look at them. Most of the common software packages do carry the facility to plot swing charts, and therefore it would not be a difficulty for you to change from your standard bar or candle chart. You can actually overlay swings on the bar and candle chart. You don't really have to move away from them either, right? So that is about swing charts. Swing charts, when plotted on charts, look typically like this. This is not the Gann style. The Gann style swing charts were a little different because they were plotted by hand. But if you had to use certain specific programs, software programs like Gann Trader or even Gannalyst for that matter, you would probably see the original style of the swing chart as plotted by him, the thing himself. But really speaking, that doesn't really matter. What you have to see here is that this is a swing chart. I really don't know how clear it is from far away, but you have smaller swings and you have the larger swings. You have intermediate swings. So the ones which are taking care of the smaller swings are the smaller duration swings. So you can use the swing charts to address any form of market movement, right? So swing charts are very useful way of looking at it. So you can note here that the larger swing in the market, oops, I think I pressed the wrong button. Oh yeah, there we are, back. This is the larger swing, and you have a intermediate swing, or you have the minor swings which are all over here. So any time frame of the chart can be addressed using the swing charts, okay? The other method that is fairly widely used, of course, would be a relative term. What I mean is widely used amongst those who practice the techniques of Gann is Gann angles. The Gann angles are a simple way of drawing trend lines from a single reference point. So typically when we use trend lines, we need two reference points for us to draw the slope, but using angle lines as fixed slopes, Gann was able to create a lattice, or what we call as a Gann fan. And he actually used a single point. That single point would typically be a good strong low or a good strong high. So you begin your trend line by angle using any significant low or high. You can draw them up, you can draw them down. And these angles are referred to with a certain jargon. They are usually referred to by the jargon called rise over run, meaning price and time. So he would look at it through price and time. So an angle line traveling at the rate of 1 unit in price through 1 unit in time is typically known or called as a 1/1 angle. The 1/1 angle is what you would refer to on the chart as running across the length of the chart, taking up as much time that is available and going across as much price that is available. So it is scaled at 1/1, and therefore, since it goes across the chart, it will typically go at a 45-degree angle. Now this 45-degree angle is a little bit of a tricky thing. It is not the geometric 45-degree angle, so you can't really slap on a protractor on the screen, mark out the 45-degree and expect that the 1/1 angle will go along those lines. What you need is a chart wherein you have this y by x, y being the price axis, x being the time axis. The y by x ratio should equal to 1. That is when you will have the 1/1 angle going at 45 degrees. So like that, you could plot it using various price and time relationship. 1 unit in price moving in 2 units in time. So that angle will be referred to as a 1/2 angle line. 2 units in price in 1 unit in time, which is a speedier angle. So that is referred to as a 2/1 price angle, and so on. So you can have prices running at various speeds, right? Prices sometimes move slowly, sometimes move aggressively. When they do move aggressively, very clearly the angle of ascent or descent, for that matter, would be pretty sharp, and therefore you would have the reference of the angle line as being 4/1 or 8/1 and so on, right? So typically the jargon goes as the Gann angle line is a 1/1 or a 2/1 or a 1/2 or a 1/4, etc., right? So this is how it looks on the chart when you draw them all. In your software, for example, a lot of you might be using Metastock or AMI Broker. you have a tool in there called the Gann fan. The Gann fan typically draws all the angles from a 1 by 16 or maybe a 1 by 8 going up to an 8 by 1 or even a 16 by 1. So it gives you the whole range. But if you are using some other sets of software, then you can actually draw the angle line 1 by 1 as you wish to draw. So if you want to choose a 2-into-1 angle line, that particular software will give you the facility to draw the angle of your choice. So it really depends upon the software that you are using. Okay, and now the key thing here is that the angle lines are used for support and resistance, right? That is their function, because at the end of the day, they are nothing else but trend lines, and trend line function is support and resistance. So the angle line, except for the fact that they emerge from a single point, right? They function exactly in the same manner as all other trend lines. What Gann has stated in his courses, there is one section in his course called Speculation, a Profitable Profession. And then he's got another portion in his course where he devotes completely to angle lines. So those of you who are interested can probably maybe download the course and look to read up on this. So when one angle is broken, prices will go to the next angle. So that is the observation Gann has made, which gives us a very, very good lattice for us to measure the progress of any stock. If it were to be a steep at the start, all the price movements up or down will be steep, so they will follow probably something like a sharp 1 by 2 angle line. So when that breaks, they will drop down to the 1 by 1. When that breaks, they will drop down to the 2 by 1, and so on. So as you go along in the price move, the Gann angle lines will build for you in advance a series of supports and resistances which you need not keep changing or altering as price moves emerge. So you need not, of course, this doesn't stop you from using any other trend line by angles, trend lines as well. Okay, so that is the portion related to angles. Here is a small example chart using various angle lines which I have drawn on one of our local charts. So I've used this low, and then you can see the angle lines flow out to the upside in blue, and the angle lines flow out to the downside in orange. You can also draw angle lines from the bottom, joining the bottoms for support. From the tops, you can look for resistances. Similarly, from the bottoms, you can find resistances, you can find supports, etc. So Gann angle lines are very, very flexible in terms of providing you with what you require from the market or from a chart, which is both support and resistance as the price flows. Gann also was very, very fond of looking at it on time. In fact, he's gone on record as saying that until the time factor is not in place, price changes will not occur. So Gann had a lot of focus on time, and he had a variety of ways to look at time. This is one of the examples where the price itself has been converted into time, right? So I've used, this is the same chart on which I had placed the angle. So I've used the same chart just to show you that multiple techniques will work on the same object, right? So using this low price has been converted into time. This is a way of doing it. Not all softwares can do it, but you can, however, do it manually, right? In fact, Gann was even one step further, because he would actually look at time from both the perspective of trading days as well as calendar days. So you can just imagine the humongous amount of work that the man actually put in. Today, we just tap a button on the software, and the software will actually draw it out for you. You can tell the software whether you want the chart to be plotted on, let's say, calendar day basis or trading day basis, and it will quickly switch over and do the same for you. And you had to do this. And just as a background, this is all things that we used to do manually back in the 80s. So when I actually happened upon on Gann somewhere around early 80s, and at that point of time, of course, no software. We did all the charts by hand, and I used to actually do this whole thing by hand. It got to a point where you were running short of time, and you had actually hired a couple of college students who would come in the evening and draw the charts, put on all these things, because you needed time to spend on analyzing charts and not really preparing them, right? So today's, with the various kinds of software which are available, converting price into time, converting range into time, right? This is one of the examples that I'll show you later on in the day when we look at the example of Nifty. range to time, or even fixed period cycles. Gann was, as I said, an astronomer, and astronomy is full of fixed period cycles. Like every time cycle known to man has its basis in astronomy. 24 hours in a day, 365 days in a year, 52 weeks in a year, etc. Time is a measurement which we have got or which we use in our daily lives through astronomy, not to be confused with astrology, mind. That's a different field. But astronomy is the basis for a lot of time cycles, and Gann was a very ardent student of astronomy, and you can find glimpses of it in his work. If you take the effort to read his work, you will find lots and lots of references to movements of planets. These are not astrology oriented, but astronomy oriented. All right, so if you are going to be a serious student of Gann in the future, do take some time out to learn a bit of astronomy, or go back to your school and college texts to get a little bit of brush on what it is. Right? While reading up on Gann and studying it through the years, I've been doing that for, like I said, for about 20 years. I have gone back to my high school geometry, high school trigonometry books, the early college years when we looked at that sort of math, and because a lot of mathematical items come into Gann. And if you have a little bit of mathematical bent of mind, I think you will find Gann's work extremely interesting. So this is what I wanted to show you. The fourth item, which is also fairly popular, which Gann used but did not really elaborate upon too much, is called as the square of 9. The square of 9 is an arrangement of numbers in a certain geometrical way. You can call it a pyramid, you can call it a whorl, you can call it a circle, you can call it a square, call it any name. It's still a geometrical arrangement of numbers. Markets are nothing but prices, and prices are numbers, and therefore markets are creations of man. Man is subject to nature. Nature is subject to the laws of geometry and trigonometry, because maths is one of the pure sciences, right? So taking all that into account, Gann imported all that into the markets, and he looked at the market using a lot of geometry. So if you enjoy geometry, or you enjoyed it during your school days and college days, you might want to revisit the areas of Gann. I'm sure you'll find it very, very interesting. So square of 9 is one of the methods that he also uses. Square of 9 is widely known, popular we can say, but greatly misused in terms of what is the way to do it. There are many, many ways to do it. We shall use one of the aspects today in my illustration of the Nifty. So I'll be using the square of 9. So this is another method. So these four things, swing charts, Gann angles, the time count, and the square of 9, these are available in the public domain. And what I'm going to show you today is largely going to be dependent upon what we see here, right? So how are we doing on time? Ma'am, we are okay? Yeah? So you need to give me a heads up, right? If I'm running out of time. All right, so what we are going to do is apply Gann's techniques to find tops and bottoms of intermediate nature in the moves in Nifty. And we shall use commonly available tools, which I enumerated right now. Tools are those four. As I said, all of these tools are available in any of the softwares that you would be using today, right? Maybe not all of them together in one, but if you were to add one more piece of software, you would probably get them all. Right? So let's go ahead and take a look at it. We shall start with swing charts. I explained to you briefly what swing charts were. Right? Swing charts measure price move extent as well as the duration of move. Now you're typically oriented towards looking at the calendar day, the trading day charts, and you measure time in trading days. But in all the methods of Gann that he has shown on his original charts, all his swing charts were typically using calendar days. So it's not the whole reasoning that he had briefly mentioned in one of the areas is that even though the markets may be shut on a Saturday or a Sunday or a holiday, the market never shuts down in our mind, and it keeps working there. So the market is actually 24/7 or 365 days in a year. So he chooses to use swing charts using the calendar days. Now the observation that is built in this swing charts is that they have a tendency to repeat. right? Both in price and time. When you look at a chart, that is not really so apparent. But then when you start looking at it in terms of swings, you would find that these swings keep repeating over and over again, both in price extent and as well as in time. Now, they are not going to be exact to the last rupee or the last trading day or calendar day. But then what we are looking at is some sort of averaging across the past, where we can say that a certain swing length would be this much. If that is exceeded, then it would go to another level. If that gets exceeded, then some more, and so on, both in price and in time. And it is really this aspect of the swing charts that we are going to use to forecast the future price in time, where changes can be expected or anticipated, right? Along with this, Gann has also provided with something which he calls as the 9 buy and sell rules, wherein the swing charts are concerned. So these buy-sell rules of Gann are something which are extremely useful. I shall briefly refer to them during my presentation. They are easy to find. Anything on Gann is now out of copyright, okay, because they were all from the 30s, 40s, and early 50s. So all of them are free to download. You don't have to pay for anything which is originally written by Gann. So just go on the net and you will get all his books, all his rules, all his letters, everything related to Gann is available free. Now that doesn't make it easy to understand or to do, but then it certainly makes it easy to gain access to his material, which was difficult in the earlier years, right? So this is what we shall use in swing charts. And here is the first of the swing charts which I want to show you. This is the chart of Nifty. What we are going to do is we are going to use those 4 elements: swing charts, Gann angles, time, and the square of 9. And we are going to look at Nifty points of buy and sell, right? Where we could get a buy, where we could get a sell. Now here I have actually enumerated the Gann buying point rule or buy rule number 2, number 3, and number 7. So Gann in his list of buys has put in saying that which forms a good place to buy. He says a good point to buy or a safe point to buy is when a series of tops of previous weeks have all been exceeded, showing that the minor or the main trend has turned up. So in this particular case, as you can see, I'm actually using the period post the election drive up, okay? So that was the period, so we can leave this part out. And I'm actually using the portion post July, August of last year as an illustration of the methods. So you're seeing a series of higher highs which are being posted on the weekly charts. So Gann's buying rule number 2 is met. Buying rule number 3 says what is the safest buying point? He says buy on a secondary reaction after any commodity has crossed previous weekly tops. So here is the issue. We had weekly tops being exceeded, and then we have this nice pullback, and that pullback has ended, and then you have the swing which has actually resumed. Now I remember I told you at the start how we generally consider that the swing has resumed when it lasts for a certain period of time as defined by us. This is a 2-day swing chart, and the 2-day swing chart, when you have 2 successive higher highs, the swing has changed direction. When you have a buying point reached and the swing changes, that is the point to look for an entry into the market. And as a result of this, the swing chart said around here in the month of August is a good point. This also fulfilled Gann's buying rule number 7, which says that buy when wheat, corn, cotton, okay, that was his area of, let's say, specialization, or any commodity declines. Any commodity, largely this is taken from his commodity course, so that is why the word commodity keeps coming, but it really doesn't matter. Any instrument. It declines to 50% of the highest selling price or half of the range that it has described, right? So this is approximately about a 50% retracement of the previous range. The swing has changed. The earlier buy rule number 2, number 3 are satisfied, and therefore, based upon the swing, the market is saying that you are at a potential point where you can buy. Now, once we have the signal from the swing chart, we can bring in, or it's not exactly in that sequence, but then you can mix it up any which way. I have just used it in that particular sequence for this piece of presentation. What you can bring in is the Gann angle. This is the Gann angle drawn from this low, which is probably the start of the larger movement that we saw in the market. using that swing low, I have a 1/2 Gann angle line, which actually gave me a perfect support situation at the low which the swing charts had defined, saying that you are probably at a point where you can think of going long. So I have an additional confirmation coming in by way of the Gann angle line at that particular swing low. So now, out of the four, two of them are in. Now this is the third one. This is the square of 9, which I showed you as the square of 9 whirl, but now the square of 9 has been converted on the chart into horizontal price levels. Like the square of 9 gives us a series of numbers, right? And once we take in the level of the Nifty or whatever instrument we are looking at, we can input the low or we can input the high, we can input any price from where we wish to start the measurement. So we are using that here as a function, and these are all 360-degree divisions, which are one full cycle on the square of 9, right? I may be going a little fast here for those who are unaware of what the square of 9 is, but you'll have to forgive me. We are only having about an hour here in which to go through this entire presentation. I'm sure you can find reams and reams of material to read on the square of 9 if you were to access the net, right? Many of it is nonsense, but then within that you will probably find a few which are good. So back here, the square of 9 gave you a support as a pullback to one of the 360-degree levels at that same swing level which we are interested in. So we had the swing chart telling us that now is a good time to go long. We had the Gann angle line telling us that this is a place of support. We have the square of 9 which also came in. And finally, we are adding the time. So in the time, this is the swing low which we are speaking about, and we find that a low to high cycle, which I have measured here, a low to high cycle expanded by 50% in time gives me an exact hit on that low. So Gann has said that you must always look at 50% expansions of any move. Any move can be, a move can be defined as a low to high, a high to low, a high to high, or a low to low. So there are 4 cycles that can be operative in the market at any point of time. Now it will require a little bit of trial and error for you to know which of the cycles is actually operative, right? Now no one said this is going to be easy, right? So you have to do the work. So this is a low to high cycle which when expanded by 50% of this time and pushed forward gives me a time count exactly on the day of the low. So then what do we have here? What we have here is swing chart signal buy. That was the level back in August. The swing low confirmed by the Gann angle from the prior lows acting as a support. The swing low confirmed by the square of 9 line, and the swing low which occurred exactly on the time count as had been indicated. When all of these 4 elements are in place, we can take that to be a confirmed setup for a buy. And this is good enough information for us to go long in the market and create an expectation in the direction which in this case would be up. So that is what we got. We got a setup for a buy. And then let's see what happened. Based on that particular setup, this is where we went long, and this is the move that we got, right? And this is the move that we got. And then subsequently, so either you can take your, you can take your money off in this move if you're satisfied with it, or you can continue your analysis using exactly those same 4 elements until you come to a point of resistance where all the 4 elements are now in place again. And that would constitute a significant high where you must take your profits, right? So this is a process where you must do your analysis for lows and highs, bottoms and tops, no matter what time frame chart you're looking at. I'm using the daily chart of Nifty, but the same thing can be repeated on an intraday chart, whether it is a 5-minute chart or a 30-minute chart, 60-minute chart. The time frame of the chart is irrelevant. Same thing can be done on weekly and monthly charts with similar results, but then your results are going to come across weeks and months. I have mentioned here that there is something here called possible overbalance. Now, overbalance is something you will learn when you read about Gann's work with respect to swings, where he says when there is an extra length in time and in price which has not been seen in recent times, then the market is giving us a warning that perhaps it might be, sort of ready to go down or ready to change trends. So at this stage, on this move, okay, you are seeing some numbers here. They are not very, very clear, but what these numbers are, they are the length of the swing in terms of calendar days, in terms of the number of points that has moved, what is the date on that day, what is the, the price level on that day, etc. This is a function of a software. Very clearly, if you want to do Gann's work, things like Metastock and all won't do the trick, right? Because they are basic entry-level software, powerful as they are, there's no complaints for normal work. But when you want to do a little bit of more esoteric work, like works of Gann, George Baer, Alan Andrews, etc., then you do need access to other software. Maybe Metastock can do a part of the work, but the rest can be done a little later. This is software called Dynamic Trader, which is excellent for doing swing work, angle line work, price and time work, right? So those of you who are interested in it should probably take a look at Dynamic Trader. This is made by Robert Miner, who some of you might have seen during his last visit to India. I think he was here about a year or two ago. I am a great admirer of the Robert Miner, and I use his software a lot. So these are areas. So what I have circled here is that this particular decline here was greater in time as well as in price than any of the previous sort of corrections. All corrections are to be measured against corrections. All advances or big declines, that is the trended portions, are to be measured against similar trended portions. You don't mix and match the two. So this had a greater price and time, and that is why this is called an overbalance, and it was a hint from the market that possibly things may not be so good. So that is why I've mentioned here, move your stop loss on your long position to somewhere below this, right? So you take a little bit of caution and go there. Now what happened was that the swings actually stopped at that point. They did not break the previous swing low. You remember Gann's rule number 1 for buying, crossing of the previous swings, and similarly when you have a sell rule, the crossing of the previous swing lows is required for a sell to be generated. That is self-evident, right? So the previous swing low was not really threatened, so this low actually survived, and then the market started moving up from there. So our stop loss here would have been a prudent thing, it would have protected us from any premature exit. Now when we went up here, this was I think post whatever the results maybe or whatever some other time, and there one of the other buying rules of Gann kicked in, which is Gann's buying rule number 6, which says buy after breakaway points are crossed on individual commodities. The market will then be in a runaway move where you can make large profits in short period of time. These are all, let's say, verbatim extracts from his course that I have taken, and it may not be very clear, so that's why I just read it out to you. So this is a breakaway point, and then the breakaway high is also crossed. So Gann's buying rule number 6 is fulfilled, and we got a second buy signal out here, and then the market ran on rather nicely. And after this big run up, we have reached a point where now the price is up by about 916 points from the low, right, from here, and the time taken is 42 days. Okay, these are periodic calculations that you need to do if you are not using a software which will do it for you, but you can also do it on Excel, but would be a bit cumbersome, but it is sort of possible to do. So there you go. What do we have at this stage? At this stage we are already long 2 signals, right? One at the bottom of that swing, second with the breakout. Now the swing lengths, as I said earlier, they tend to repeat, and we should check prior averages of swing lengths. And when you check prior average of swing lengths, what I had found was that they were in this region of between 920-30 points going up to about 1,020 points. That is the average swing length for the big moves. And the big moves also lasted for about 42 calendar days. So at this juncture, we had, when the current swing reaches similar zones in price and time, that is the time for us to start looking for additional evidence of tops and bottoms, right? So we get warned by the swings, and then we look for additional evidence. And this swing chart length here, 916 points and 42 calendar days, which was in line with the previous averages, that warned us to look for other topping signals using the other methods that I have said we would be using here. And when we look at it, what do we get? We get, what we get is that the square of 9, this is where we use the square of 9, right? And this is where we are looking for additional evidences, because we had a buy here and then we had a buy here. And now we have had a big move. That move has been in progress. This entire move is about 916 points, and this is 42 calendar days in length. At that stage, we have the prices slamming straight into a square of 9 level, which adds to our resistance. We have a precise match on the time element, so I have used the low to high sequence here, and then at that stage where we had the second buy, we had a time count. So this is a kind of expansion in time. Now this is the second expansion in time. This is again a 50% expansion of the previous range, and that is where that is also tying in at around the same level. Now when you are referring to time, time is by itself not a reversal phenomenon. Time is just clock time when certain things are expected to happen in the market. At the point where you reach a time count, three things can happen. First is the market can reverse from that place. Second is the market can stop moving higher from that place and start consolidating. And the third thing is the market can redouble its move from that place, that it could actually accentuate. So any of these three things happen. Typically when the move has run on for a while, what we largely expect is that the market should actually go into a bit of a reversal. So here at this juncture we are looking for a reversal. We've been warned by the swings, we have the square of 9, and now we have the time. And next we have the Gann angle. So this is the Gann angle from that previous low, and this is where it got your support zone. This was the first buy zone, this is the second buy zone, and that same Gann angle which was acting as a kind of support is now broken at a high area. There are a variety of ways to interpret the role of a Gann angle, which you will learn if you make the efforts to read up about them. Not time enough for me here to explain all of them, but this is a signal in the context of all other signals that I would treat as being one of the confirmations that the market is about to reverse. So given all that, I have swing, I have angle line, I have time, and I have square of 9, the four elements that we have chosen today to address the market, and I have all of them in place here. That is good enough reason for me to exit my long at a level. And now this whole thing would give me this as the evidence. Warned by the swing length, we saw clustering of square of 9, time count, Gann angle at around the high. When prices break the trend, we close our long position. The two long positions gave us almost 1150 points on the Nifty. And this is August, and then we had a buy in October, and this was, I think, about a month later. So in about 2.5 months, we had about 1100 to 1200 points on the Nifty. This is pretty decent, I would think, as far as the returns go. Okay, so now that we are out of the position, we want to set up the next buy. And the next buy would come on the reaction. So we set up our conditions for the reaction. Now we draw the next angle line of support, and the next angle line of support is this. There are pre-decided slopes that we can have, and these can be drawn from the same point. So the next angle line, the prices get slammed down, and that is where they find support. And here Gann has got another buying rule, which is Gann's buying rule number 1, where he says that buy at old bottoms or old tops. This is an old bottom. When a commodity declines to an old bottom or to an old top, it is always a buying point with a stop loss order. Now, Gann was very big on risk control, and he stressed over and over again on setting of stops. So when you read his books, when you read his work, you will never fail to miss his focus on stop loss, which he puts up in the rule also. Gann buying rule number 1. We came down to this low, we came down to the same low again. Gann's buying rule number 1 actually kicks in here. We have the Gann angle line providing you with support. We have the time count. Now this is another time count. I've used a low to low cycle here, right? And I've expanded that by 50%. A low to low cycle is hitting my low exactly on that particular day. So I got swings, I got Gann's rule, I got Gann angle for support, and I got time. When I have all of these things in place, I have a good reason to go long, right? So that was the evidence, and here is what I mentioned. Average lengths of long moves, 920 to 1020 points, roughly 42 calendar days. These are the big moves. There are smaller moves also which will have their average. So you must be aware of all the averages when you're trading with swings. These are the previous buy levels. This is where we exited. This is where we entered again. And in this move up, right, in this move up, the market moved up by 1020 points in exactly 43 calendar days. So once again, we were at a point where the swing length said that you would probably need to take a look at what is going to happen, and it would be a good period for you to take your money off because the swing length has been neared. So I'm just sort of cutting to the chase now, not showing you all of the stuff, but now that you are a little aware of it, we last exited our position here. Gann buy rule number 7 on a 50% pullback of this last swing, right? There were also price and time matches here, which I'm not enumerating here, but we have Gann rules here. We exited the long position, and from here we went up in a three-wave structure, going up to and recording 960 points, which is into the price average range. But we did that in half the calendar time. We took just about 22 days this time, right? Once we are into the price zone or we are into the time zone as per the swing, we should probably start looking at other evidences to pinpoint to us whether we are in a point of reversal or not. So we go into our normal routine, and here is what we had before we went into it. We found that our low in January 15, using a combination of swing charts, etc. This was followed by 1020 and 43 days, showed you that on the chart, gave us an exit from a long position. So you could pocket another 1,000 points on the Nifty in a matter of about a month, month and a half. Quick pullback triggered Gann rule number 7 to the 50%, got us back in. Market rose swiftly, creating 960 points in 22 days, right? Swings were once again warning us of an imminent high. This was in March of 2015. And in March of 2015, you had reached 9,100 on the Nifty level after having begun our exercise from somewhere around 7,600. So that's a decent amount of move, and so we needed to find clusters for possible top formation here using angle, square of 9 and time. So let's go in and see what happened. Now here is, I've bundled it into this, two of the things. I've set the Gann angle and the time element. I've used the election day high, the results day high, and then I've drawn a 1 by 1 angle line from it. You can see that all the tops in the market were aligned to the 1 by 1 angle line, right? So the 1 by 1 angle line got the top here. That's a time expansion. This bottom is where we had, that's a time expansion. This is the next high. That's where you got a price and a time. This is the next high, price and a time. The vertical lines are time expansions of prior swings. This is using a low to high projected from the next low. That's another technique in time which is used by Gann, which is also replicated by Miner. You can read Miner's books for more such details on how to use forward projections of time, right? We are running along. Okay, I'm also almost done. Say another 10 minutes at the most, 5 minutes at the most. I'll speed it up, don't worry. Okay, I'm not at fault, she is. All right. Okay, so here we go. Both angle line and the time. And next, square of 9, which is what was missing. We got our swings first, angle lines, time. This is the next square of 9. And I've just added here bearish candle patterns. All of you will remember that at the peaks we had nice bearish engulfing patterns both the times when we went down from here. So you can use your standard technical tools also to bring in elements of confirmation, right? So you use those, and those two were in, all of these are 360-degree cycles. We can use other cycles on square of 9, but for ease I have used these. So everything coincided there. So at the March high, what did we run into? Swing lengths, right? 960 points in 22 periods. Overbalance in time. Time count expansion using prior moves. Square of 9 levels acting as resistance. Bearish candlestick patterns. right into expected zones of resistance. We have lots of profits sitting in the, on the table for us. It's 960 points from where we went long. Now that is not something to sneeze at. You don't stand around arguing. No further evidence was required, because we have seen time and time again that these four sets of things combine to produce a high or a low, if we were to look for a low. And this were there, so we take out our long position, which we created in January, in early March, and that is what happened, and that is where we ended the market at about 9,100. Of course, we did not exit at 9,100. We have to wait for the market to pull back, so this would have probably exited somewhere around 8,800 to 8,850, or between 88 and 8,900. So, summing up then, we can see that every low and every high, I've used only the August to March, so that's a decent period, about 8 months. And all the lows in there, we were able to track every low and every high of the price of the Nifty in relation to the prior moves. And all highs, lows can be tracked, identified, and traded, right? That's the key. There's no point in just tracking it or identifying it if you cannot trade it. Ultimately, the money is made from the trading it. So we use a combination of our tools. And the key point here is all of these can be created well in advance and kept ready. It's not that you do it after the event. You can actually do it right now and keep it ready. Thus, we are enabled and well prepared for market reversals. And what do we do when we do get this situation of a setup? We'll use shorter time frame charts to zoom in on the exact trade entry. So what I've shown you is a trade setup. A trade setup needs to be now followed by a trade trigger, right? That's how the process runs, of how you convert your analysis into a trade. So what you want to use as a trade trigger can vary from person to person. You can use linear regression channels, you can use short-term moving averages, you can use whatever candlestick patterns, trend line breakouts, you name it, whatever you are comfortable with as a trigger point for initiating a trade can be used, and these can be done on shorter time frame charts once you have the setup as we have defined it, right? So I took you through from a low in August through to the high in March, showed you the application of 4 commonly used tools on which are available in most software, showed you a small structured process. This is the way to go. This is not the only way to go. You can use your own individual skill sets to enhance all the things that I've said. But then if you follow this as a routine, I think you will probably be able to track, identify, and therefore subsequently get enabled to trade most of the lows and most of the highs that shall emerge in the market. And you will never have to say ever in the future, market samajh mein nahi aata hai. Right? This is a common refrain of most people that you hear. What they really mean is, I don't know what to make of the market right now. But the market, it just is, right? It is correct in what it is doing. And therefore, we must be enabled to always decipher what the market is doing and what it wants to do in the future. I think if you pay attention to some of the methods of Gann, or indeed any of the other set of masters that we have within the realms of technical analysis, you would be very well placed in trying to identify decent lows and decent highs where intermediate positions can be taken and substantial profits can be sought to be made. I thank you for a patient listening. If you have any questions, I'm happy to answer. Yes, sir. Gentleman out here. I don't think it's on. Or maybe you can just speak louder.
Breached the previous swing low in 470 and went back out of it. And we just read in the first point in the summary that we should go for prior time lows.
Yes.
My question is, which prior time? Should we go to 2008 correction? Because is it the end of the up move? and we should start finding the relative previous lows and the time period, or intermediate corrections which we had in this very bull run?
All right, it's a valid point. Which of the previous do we look at? Answer is not directly this or this. Answer is relative in the context of what is it that you want? What is it that you want? Do you want to trade the market for tomorrow? Do you want to trade the market for 1 week? Or are you looking for the next big 6-month move? The larger that you are going to look at, the longer the period you need to create at the back. You need to create perspective, right? Now this perspective can be created for tomorrow. And if you want to create something for tomorrow, you don't need to go to 2008 lows and all subsequent sinks. But if you want to create something for this bull market, which we say has been going on for whatever period and will go on for some more period, then you can't do it with the lows and highs of last week and last month. So it's all a function of what is it that you're looking at. Now, the more into the future you want to create this, the more into the past you have to go. Ultimately, the past is the only data we have, right? So we take the past data and we mix it up and look at what is happening in the present. We are aware of what is happening in the present, but whatever is happening in the present has to be placed in the context of the past so as to create a plausible scenario for the future. How far into the future, that's your decision. So the more you want in the future, the more you got to delve into the past. You know, if you are looking for something next week, do it off the hourly charts, do it off the daily chart, that should be more than sufficient. Supplementary question.
Okay. I'm sorry, just a minute.
Go ahead.
When should we be in a position to judge that whether we have started the lower tops and lower bottoms, what should be the level we should be deciding, or whether it's only a correction in the bull run and we are still looking for? I just want the analytical aspect. What should be the levels, or what should be the study basis, analysis basis, that which way the trend is moving?
This question is at a variance with our topic today. Right? It's not relevant to what we have discussed. So maybe we can answer this a little later. I have an answer for you, but if somebody has a question on the topic, let's answer that first. Otherwise, I'll answer him. Okay, there's somebody
Dr.
there.
Sir, I request the audience, we have been running late by 30 minutes. So on your behalf right now, I'll ask one last question to him. He's going to be here with us. We can interact more one-on-one with him. A very quick last question for the whole audience. I tried doing Gann analysis almost 15 years ago and got confused with one thing. If you change the scale of any of the two axes, then how do the angles remain sacred any longer?
That is the function of your software. So that is why specialized Gann softwares, if you take, let's say, Gann Trader, or even Gannalyst for that matter, which has done a fairly decent job, they will hold that particular relationship of y over x kind of constant through changes in the scale levels also. That is, the relationship of the line with respect to the price level will not change, right? But in softwares where this aspect has not been catered to, it won't work. Or there are softwares wherein you sort of define the y by x dynamically on the chart. That is, you take a low, you click a high, and you define that as being a 1 into 1 line, right? So once you have defined that, the rest of the axes will fall in place. But then this will also keep changing as you change the scale. So you are limited to by the efficacy of your software. The most ideal way to do it is to draw the charts by hand. I still draw the Nifty chart by hand, and I have it in my office, a big, nice one. It's almost like a wall chart. I still draw it by hand because the purity of a hand-drawn chart is very difficult to match through the software. And modern-day softwares are not really paying so much attention to this aspect. So what you say is valid. If you are using something like Metastock, etc., it will be a little difficult. Go for specialized software.
Because time is short, I'll sort of keep it, just one paraphrasing of this question. Is there any clear-cut definition in any of the literature around Gann as to how are angles defined?
Yes, only his course. You can read his course, and in that there is a complete section, right, on geometric angles, which he says is one of my main methods of analysis. There it is very fairly well defined as to how it runs. Now I showed you a small picture where I called about the labeling, the 1 into 1 and the 2 into 1. When you go into the explanation of what the 1 by 1 angle line or 2 by 1 angle line is, you will get the answer to this. It's price over time. It's not 1 degree, 2 degrees, 30 degrees, 45 degrees. Even though they are lines in degrees, but they are actually subject to the price over time axis. So that's a little bit of a tricky portion in Gann. Most softwares don't deal with it. Some of them do. If you're serious about this, you should look at those set of softwares. Right? Any other question? Otherwise, we are done.
Really running short of time.
She's not allowing you to ask.
Really sorry. Why don't you interact? We are taking a very short coffee break. Wow, he's okay.
In behalf of everyone like me, there are many students of the sir, and I don't have a words to say, but thank you for coming here. That's it.
Thank you so much. Thank you. I'm blessed.
You did